Hi, everyone. This is Scott Fong, President and Founder of SIF Investment Services. Now, if you own rental property here in the Bay Area, whether it be a single family home, an apartment building, a mixed use building, or even raw land, you've owned it for at least 8 to 10 years, and you want to increase your rental income, you should listen to this video.
There's two really little known tax advantages when it comes to real estate. And we talked about this before. Number one is the personal exemption or married exemption up to $500,000 that couples can save on taxes when they sell their home. And then, of course, you have the second, which is a 1031 exchange that applies to investment properties. Again, most property owners don't know about these two tax advantages. Can you take a minute to explain a little bit about the personal exemption of how you can save money and not pay taxes when you sell to a certain amount, and even better, how you can defer all of the taxes through a 1031 exchange? Do you mind going into both of those really quick?
No, sure. So when, homeowner sells their home, they have what's called the Section 121 homeowners exemption. And what that means is when they sell their primary residence, a single person will get the first $250,000 tax-free. If they're married, a married couple will get the first $500,000 tax-free. And those numbers, anything above that 250, if you're single, and anything above the 500,000 if you're married, is taxable above those amounts. But that's a pretty good deal to get those tax-free amounts, whether you're single or married. You can do it as often as every 2 years also. It's very well known that people have heard of 1031 exchanges. So if you own a rental property, whether that or investment property, whether that's a single family home rental, a duplex, fourplex, apartment building, commercial property, you have the ability, or investors have that ability in the United States to defer any gains, capital gains, into another like-kind property. So you could sell your existing property with gains and reinvest the proceeds into another investment property. That other investment property on the other side doesn't have to be the same as, say, you had a duplex that you sold. You don't have to rebuy a duplex as long as what you rebuy is an investment property or property. So that could actually be land, because land counts as an investment. It could be an apartment building. It could be 6 homes in Texas. It doesn't matter, but for investment property. And the power of a 1031 exchange, it's huge, because as properties appreciate, your existing property, usually your income does not keep up with your appreciation, especially here in the Bay Area and in California and most of the coast. So your property goes up 2 times, but your income usually doesn't go up 2 times. So the key would be taking advantage of knowing how well is my existing property performing, and looking at other properties that they could exchange into that could create more income and help them retire richer and sooner. Now, a lot of people will argue and say, well, I want to keep my existing property even though I can get more income because I believe this will appreciate more. I always tell people, you can't guarantee appreciation, but I would rather put my money on increased income. Sure, one tenant might not pay that month, but if my income can go from 100,000 to 150,000, that's a better guarantee than, oh, my existing property is going to appreciate more than a new property. So the 1031 exchange is unbelievably powerful, and most investors almost should at least look at their options and see if they should do one or not, so they can defer capital gains and increase their incomes. A lot of investors, when they own investment property, do not know strategies, what they should be doing with their property. And a lot of times they overlook the tax advantages or what they can do to defer taxes. And I think a lot of it has to do with 2 things. No one is truly responsible in the real estate profession for giving that advice on strategy, what they should be doing. And that's what makes us a little bit different, if I could speak that way, because, CPAs are looking at your taxes of your investment properties, but they're not going to strategize and saying, wow, you could do better. That's not their job. Financial planners are looking at the equities and your money you have in the stock market, right? But they're not going to look at the real estate. And this is no knock, but the realtors in general, most of them are looking at what it's worth and is it a good time to sell. They're not looking at tax strategies. So a lot of investors, whether they're mom and pop investors or large investors, and when I could say that have multiple buildings and large apartment buildings, they probably know about the tax advantages of a 1031 exchange. But many investors do overlook this because they don't know, to be 100% honest, who they can trust for this advice, right? So if they a lot of investors keep their existing property because they don't have a large mortgage on it and they're getting income on it. So a lot of times they don't do anything. They think what they have is actually great. And then not until we meet with them. So for example, if they have a $2 million property, whether it's a home or 2-unit or 3-unit, let's just say that they're netting $6,000, $7,000 a year, maybe, yeah, net after everything. There's no loan on it. They don't know how well what other options are out there. Is there a triple net lease, a Dollar General out there on the other side? Is there an apartment building in Sacramento that might be better performing than their San Francisco property? So the real estate space is very, very confusing, I think, for individual investors because they don't have any go-to professionals that I feel that they really trust. And that's really one of the hardest hurdles for investors, is not only that tax hurdle or the cash flow, but where do they get this information? So they can always contact us and maybe can chat with their CPA for tax advice also. But yeah, the 1031 exchange is definitely overlooked by a lot of investors. So if you own a highly appreciated property, whether that's your primary residence or an investment property, and that investment property could be, single family home, apartment building, commercial property. If you own these types of properties in the Bay Area, let us look at those properties and we can give you a complimentary consultation on how well they're performing, how well the cash flow is, how much equity you have in your property. We can give you analysis of how much they're worth. Obviously, you know what you paid for, but we can give you a picture of, is it working? Are your properties working well for you? Does it make sense for you to keep them, hold them, refinance them, or do a 1031 exchange? Can we help you exchange into other properties that can help you retire sooner or richer? So we can give you a complimentary consultation, 30-minute consultation on your property or properties. We're not realtors, we're purely consultants, fee-based since 2002. There's no obligation, we just want to make sure that you're getting the best out of your properties.